Good afternoon, ladies and gentlemen, and welcome to the Stobart Group investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated in the right-hand corner of your screen. Simply type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I would now like to hand you over to Warwick Brady, CEO, and Lewis Gurwood, CFO of Stobart Group. Good afternoon.
Good afternoon and welcome everybody to this presentation. My name is Warwick Brady, the CEO of Stobart Group, and this is my colleague Lewis Gurwood, our CFO. I'd like to run through our presentation and talk to you about the value represented by the Stobart Group. We have two core businesses, Aviation, which includes London Southend Airport, and we have Stobart Energy. Yesterday, we provided a trading update ahead of our half-year results. The key point is that we retain £119 million of cash and undrawn banking facilities. That demonstrates that we have undertaken tight cost control and we have retained much of the £140 million of new equity and banking facilities that we secured in June. Essentially, we have cut staffing costs, utilised the furlough scheme, and deferred Kpis decisions at London Southend Airport. At the same time, maintained uninterrupted income from our cargo operations. We have done that while ensuring we maintain the capacity to come back quickly once the quarantine restrictions that are limiting passengers flying are lifted. The biomass plants that Stobart Energy supply are now all operational, and this is leading to consistent demand profiles. In turn, we are delivering contracted volumes lead to more predictable cash generation. However, the disruption to the construction industry led to a fall availability in waste wood at the height of the pandemic. In order to protect the business and ensure we had enough waste wood to then supply our biomass plant partners, we took the strategic decision to rebuild stock levels. Clearly, this came at the expense of gate fee income, but this is expected to recover in the first half of 2021. Stobart Air is below expectation as a result of the continued quarantine arrangements in Ireland, with limited flights operating. We're entirely focused on sorting out Stobart Air, and we have a four-step plan. Step one, ensure we've got tight cost control and cash management. Step two, mitigate our risks in terms of the parent guarantees. Step three, enter into a new commercial arrangement with Aer Lingus. And then step four, divest of the business. We are on with the plan, but we'd be disappointed if we had not exited that business before the end of our financial year. It's worth, if we move to slide 3, which is a focus strategy, it's worth taking a step back to remind you all of our strategy and our plans for future growth. Stobart Aviation with London Southend represents the medium to long haul value of the group. Stobart Energy is a cash generative business based on long-term contracts to supply biomass fuel to the energy plants. We believe this business is with its infra-like characteristics will be attractive when we come to monetize it. Of the two businesses, we see the airport delivering significantly higher return on capital employed, and therefore we aim to monetize the energy business in what is now a 14 to 20-month program, generating cash that can help fund the next stage of the airport growth. Stobart Air and all of the non-core portfolio will also be realized for value. This will leave a business focused on a valuable and increasingly mature London airport, and we will then explore further airport service opportunities that arise. The fallout of the current crisis will create opportunities, and our plan today is to talk you through our businesses and why we can create significant value for shareholders. So the question is, why focus on aviation? Well, there's no question the aviation sector is facing huge challenges. The industry has never experienced a challenge like this, and London Southend has certainly been hit hard by the crisis. However, we truly believe the world will ultimately keep moving. People will continue to want to travel, go on holiday, and in terms of recovery, we are seeing the airlines focusing on flying between major hubs. And London is the biggest hub in the world, it's the most populous city in Europe, and pre-COVID was the third most populated visited city in the world. That's why the CAA is forecasting recovery in London and travel and return to growth over the next few years. Particular winners will be the low-cost carriers who have weathered the storm better than the transatlantic Atlantic airlines. We saw this summer that short-haul leisure travel was starting to improve, with people wanting to get away on holiday where the opportunity arose. Despite these challenges presented by quarantine, clearly the environment has been more challenging as the summer has moved on. London Southend Airport serves low-cost carriers flying to short-haul European destinations. Essentially, the summer was tough, the winter will be tougher, but then we should be able to start seeing airlines having the visibility to make commitments in terms of basing aircraft from March of next year as we build up to the next summer season. For transatlantic airlines, the industry is predicting at least a circa 3-year recovery, and we see short-haul leisure recovering much quicker than the likes of long-haul legacy carriers like British Airways. In terms of having the ingredients in place, we believe flying in and out of London will return, and we believe we can capitalise on this for 4 key reasons. Firstly, we have an 8.2 million catchment area with a low-cost operating opportunity versus other airports. We've already raised money to invest in delivering an excellent COVID-ready passenger experience. We have relationships with all the key low-cost carriers and other airlines, and we have differentiated earnings profile, including ownership of a rail station that serves the airport. In terms of the demand profile, over 60% of our passengers travel from London. London Southend Airport can be reached in just 51 minutes from Liverpool Street by train. That's similar train time to Luton, but obviously without the bus journey on top and less time than going to Stansted. The airport is close to the M25 and also will benefit from Crossrail once it eventually opens. We have a significant catchment area with London moving increasingly east, and we believe we can offer airlines the right location that fits their strategies for London. I'm going to pass over to Lewis to talk about the securing the investment.
That's great. Good afternoon. Thanks, Warwick. In June of this year, we successfully raised £100 million to a capital raise compared to the original 80 million that we'd set out to raise. That money will be used to stabilise the business and provide liquidity to see us through this current crisis. At the right time, money will also be made available to put in place an enhanced passenger experience in a post-COVID world. This will be done in line with the passenger demand. We intend to continue to invest in contactless technology. We already have in place automated boarding pass gates and next-generation security scanners so that people don't need to remove liquids and laptops when moving through security. We will also invest in automated bag drop at the right time. All of these things will further enhance our existing fast-flowing airport. We already have the joint fastest security queues in the UK, which avoids bottlenecks, reducing the risk for passengers through reduced holding times. Unlike other London airports, we also have the agility and the opportunity to reconfigure the airport to provide a spacious, streamlined environment. We already offer 17 square metres of space. However, we also have existing space that is not currently being utilised. We intend to ultimately use that space to create an extended security area and further retail space. Longer term, we plan to move to a new arrivals terminal at low cost, freeing up space in the existing terminal for further retail and departure lounge space. All of our airport investment will be done at the right time and in line with passenger growth. Moving on to airline partnerships, our location benefits airlines that are looking to complement South and West London bases with East London and South East catchment coverage. We can also offer available London slots, and as the London travel market recovers, that we have the ability to offer certainty in terms of slots is a real differentiator. However, perhaps the most important thing we offer airlines is a low-cost base of operation. Our airport was built in a much more capital efficient way than other London airports, and that allows us to pass on those cost savings to airlines. That's key in today's environment. Moving on to airport revenue sources, the greatest advantage we have versus other airports is the infrastructure that we own. We are the only airport that owns its railway station. In fact, it's one of the only private railway stations within the UK. That means we take a significant share of the revenue from rail travel to our station, which is located just 100 paces from the departure terminal. We also operate the hotel via a franchise management arrangement, providing a further revenue source, and it's one of the highest rated holiday inns within the UK. We earn money from our on-site short stay, long stay, and pickup car parking, and have effective drop-off charge pricing in place. And of course, we make money from retail, aeronautical revenues, and fuel sales. Finally, as a critical differentiator, we also have a global logistics customer and deliver cargo operations and airport infrastructure. This provided an important constant source of income for the airport throughout the lockdown. I can't emphasize enough what a valuable business that has been for us, and there are further opportunities to leverage the expertise we've developed at that location. Thank you.
So it's worth taking a little bit of time to talk about Stobart Aviation Services. They provide check-in, baggage, handling, and also deliver our cargo operations for our logistics business. They operate across Southend, Stansted, Glasgow, Manchester, and Edinburgh airports, and have obviously been hit hard by the pandemic. However, pre-crisis, it was an incredibly fast-growing business with low capital requirements, and we think can pick up opportunities where other providers such as Menzies are suffering. Stobart Aviation Services operate a cost-plus model with a much lower cost base and are better able to weather the storm, become a truly valuable business for the group. The plan is to hunker down, minimize costs, and put the business in position to come back stronger at the right time. And now moving on to energy, UK's number one. I think it's worth taking a moment to explain what the Stobart Energy does. They receive waste wood from suppliers and they then pay us to take it, which is called a gate fee. Those suppliers tend to be involved in the construction sector, would otherwise have sent the waste wood to landfill, paying a much higher gate fee to the landfill operator. We receive the waste wood at any one of our 6 storage and processing sites across the UK, and we can store roughly around 100,000 tonnes of waste wood at any one time. We then process that wood by chipping it into specifications of the biomass plants, and we supply and deliver it to them. We have contracts in place to supply 1.7 million tonnes on long-term agreements, making it a very stable business. And pre-COVID, we're operating over £12 EBITDA per tonne. Like every business, it was impacted by a pandemic. The shutdown of the construction sector impacted the availability of waste wood. However, the restart in the construction work across the country has improved that position considerably, meaning we can deliver the required volumes. We are currently taking steps to rebuild the waste wood stock ahead of the anticipated winter demand. That is coming at the expense of gate fees, clearly, but we expect that income to recover in the first half of next year. Handing it back over to Lewis.
Moving on to attractive to investors. Throughout the pandemic, our team has received key worker status, recognising the strategic importance of what we do. The renewable energy plants we supply generate circa 2% of the UK's electricity. We're also key for delivering the UK's CO2 reduction commitments. By taking wood that is destined for landfill, we prevent CO2 emissions from decomposing wood. Ultimately, this business remains profitable, cash generative, with high barriers to entry and long-term contracts. These factors, combined with its strategic importance, will make Stobart Energy attractive to infrastructure investors, and we intend to monetize this business within the next 14 to 20 months. We can then use that money to support the next stage of growth at London Southend Airport, where we can achieve significantly higher returns on capital employed and create value for shareholders. Moving on to non-core assets. On slide 16, we lay out the other assets within the group. We have already disposed of the brand for £10 million, and as a result, we will be renaming the top code by the end of this financial year. And we've disposed of the civil engineering business, meaning we will no longer need to carry the ongoing losses in that business. We are mitigating our financial exposure to Stobart Air, and we are in discussions with potential partners to exit. That is the main focus of the executive team right now. We retain a shareholding in Eddie Stobart, which we aim to dispose of at the optimum time. Carlisle Lake District Airport is not going to serve passenger flights in the short term to medium term, at least, but we have options around logistics and other uses for that airport. And all of the other non-core assets will be sold for value at the right time over the next 3 years. Moving on to KPIs. On page 18, this shows that we have operating businesses that were growing in terms of revenues, underlying EBITDA, passenger numbers, and tons supplied prior to COVID-19 and the pandemic crisis. It's important to recognise that losses had also been widening. However, these losses were primarily due to non-cash items relating to depreciation, charges applied to the portfolio of non-core assets held for disposal, the rail division, which has now been exited, and losses associated with Flybe, which was an early victim of the coronavirus impact on aviation. With the balance sheet now de-risked, we're in a much better place going forwards. Let me move back to Ryan.
I think the upcoming milestones slide on slide 19. In the medium term, we'll still firmly believe we'll get to 5 million passengers but there are a number of catalysts between here and then. Looking ahead, we remain confident in our relationship with existing carriers, and we are in positive discussions in relation to the post-winter schedule, which starts in April 2021. By the end of the financial year, we believe we can achieve a resolution to our current ownership of Stowe Air, and resolving our exposure to the liabilities attached to the airline should be seen as a positive. We also have a portfolio of infrastructure assets and expect to be in a position to announce asset sales throughout next year and the following year. We also announced that we would seek to monetize Stowe Energy, and we are targeting a monetization to take place in the next 14 to 20 months. That is a business that was independently valued at in excess of 210 million as of the 30th of June 2019. The monetization of Stowe Energy is expected to come when we believe we'll be getting 2.5 million passengers. We already have that volume of passengers. The monetization of the energy capital to fund the further development as we look to expand the airport from 2.5 to 3 million passengers through to 5 million plus passengers and beyond. Moving now to a clear plan for growth. There are a few thoughts we wanted to leave you before we hand over to the Q&A. Ultimately, you have to decide whether you believe the world will recover and whether people will start flying again. We believe it will. It's not going to be an immediate return to flying. However, the downside risks of further delays are already priced into our share price. Before COVID, London Southend was valued at circa 700 million. That valuation came from an aviation infrastructure investor that wanted to acquire 25% of the airport. The deal fell away because of COVID, which is not the right backdrop for a deal, but we believe the interest of that nature will return. You will also get an energy business that in September last year was independently valued in excess of 200 million. We also have a portfolio of non-core other assets with a book value of 40 million, circa 40 million, that we are steadily disposing of. And we retain 119 million of cash and undrawn facilities that will continue to allow us to stabilize the business and manage through the crisis of 2021. That liquidity, managed carefully, will allow us to realize our plan to dispose of our non-core assets, monetize Stowe Energy, and focus on developing a valuable London airport that can deliver enhanced passenger experience post-COVID. I hope that has been a helpful run through of the Stowe Group. And now let's move on to questions.
That's fantastic. Warwick, Lewis, thank you very much indeed. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand side of your screen. But just while the guys take a few moments to review those investor questions submitted already, I'd like to remind you that recording this presentation, along with a copy of the slides and published Q&A, can be accessed via your dashboard on the Investor Meet Company platform. Lastly, before I hand back to Warwick and Lewis, I would like to remind you that your feedback is important to the company. Immediately after this presentation has ended, you'll be redirected for the opportunity to provide feedback. Warwick, Lewis, before we look at the questions submitted during the presentation, we've had a number submitted already from investors. If I could just perhaps pose these to you as we go through. The first question we've got: following the departure of EasyJet from Southend Airport, what is the risk of Ryanair doing the same? Is Ryanair tied into the airport, and what is their get-out clause?
Our relationship with Ryanair, we believe that they see value in maintaining their base at London Southend.
Thank you very much. The next question we've got here: LSA's success in achieving shareholder return is dependent on significant growth. We've seen the challenges other regional airports have in gaining airport planning approval, especially on environmental, transport and access issues. How do you plan to address this?
First thing to say is it's not a regional airport. It's a London airport with 8 million catchment. For the time being, we have a planning cap of between 6 and 7 million passengers, depending on how you cut it. An airport with that sort of volume, passengers, is very profitable and very valuable. In terms of the future, we're comfortable with our master plan engagement. It's a question of timing. The council see the benefits of the airport in terms of jobs and economic value to the region, but we also need to think about the time and the cost of going through that process in the near term.
Thank you very much indeed. The next question we've got here is: I'm hearing persistent rumours that the significant freight partner, open brackets, Amazon, close brackets, are considering Stansted as an alternative site, given the landing slots are now available and better transport access routes. There's also been suggestion that Manston could become a real alternative, noting the longer runway means Amazon can use larger aircraft. Please, can you comment?
Yeah, sure. I think that's it. It's just rumours. We've got a great partnership with our logistics partner, and we're the best performing base within the UK already. Our runway works for the aircraft used by the logistics partner, and it wouldn't make sense for them to move away given our performance level and also the proximity to their distribution centre at Tilbury.
Fantastic. Thank you very much indeed. The next one we've got here, if we are divesting of Carlisle Airport, Stobart Air lacks major customers, and in Southend lacks major customers, what exactly is the company even focusing on anymore? You have to understand the frustration when the strategy seems to be deviating constantly.
Well, I mean, we're focusing on getting more customers on the Southend Airport and establishing a truly valuable airport. Stobart Air contains some major liabilities that don't. We're not necessarily divesting of Carlisle Airport. However, the airport will continue to face challenges in terms of profitable commercial flying given the pandemic. I think there's a real opportunity around logistics and the potential land value. In the immediate term, it makes sense to focusing on developing London Southend, establishing the real value, and then looking at other airport opportunities, potentially with an infrastructure partner going forward.
That's great. Thank you very much. And the last pre-submitted question we have, can you tell us about gate fee price volatility, the plans to increase to 2 million tonnes, the variability of cost and plans to develop in the EFW space?
Yeah, certainly. So first thing to say is gate fees are volatile on the whole. They'll essentially track with increases in the landfill price. What we've seen is two one-off events in the last 2 years. Lots of biomass plants coming online at the same time, creating lots of demand within a short period is a one-off event as we see it. This year we've seen construction and recycling centre closures because of COVID, and again we see that as a one-off. Last year we supplied around about 1.5 million tonnes, which for the energy business overall we delivered 7.63 million of revenue and EBITDA of 24.2 million. In terms of increasing to 2 million tonnes, that's best achieved by developing our relationships with other plants that don't have exclusive supply arrangements. The majority of Stobart Energy's costs are variable. These variable costs are associated with the collection of the waste wood itself and then processing it into the fuel chips. Fixed costs represent around about 30% of this business. The key thing for this business is that we have a stable supply chain, and about 2/3 of the volume we supply is already contracted. The rest of what we supply is also contracted, but not on an exclusive basis, so on shorter contract terms. In terms of EFW opportunities going forward, our plan is to identify the opportunities, develop a plan, and then provide that plan to a new infrastructure investor as part of the growth opportunity attached to the sale of Stobart Energy itself. Thank you.
That's great. Thank you very much. And I know I haven't given you quite a much amount of time to have a look. We've had quite a number of questions submitted. If you could please just start at the top and just read out the questions where appropriate to do so, and just give your answers, that'd be great.
Okay, so first question, so there's from Anand D. Can you talk about the latest progress on Stobart Air, please? So we're talking to a range of interested parties and have a clear plan to reduce costs and position it for sale with an appropriate air lease agreement in place. We'd be disappointed if we'd not exit the business by the end of our financial year.
Okay, I'll actually take this question here. What is the quantity of wood waste on stock as at the start of October, and how does that compare both with last year and where you wanted to be if COVID hadn't happened? I'm not actually going to disclose the volume that we've got, because obviously that's an advantage and competitive advantage that we create by taking stock holdings. What I can tell you is that we are holding more stock now than we held last year, probably about 1/3 more than we held last year. And if COVID hadn't happened, then clearly we would have dropped that stock holding back slightly. But that's where we are now, and we're confident with the stock level that we've put in place from that volume.
We've got another one from Anand. Do you think it'd be possible to secure new passenger airline capacity at Southend in the current environment? Do you get the sense that those airlines that can grow will negotiate more aggressively with airports and the knowledge of their incremental capacity? So we're in constant dialogue with airlines, both existing and potential. Obviously, the quarantine arrangements have created huge uncertainty for airlines. It's very hard for them to make However, we remain convinced that our low cost of operation and proven routes will mean we'll see new airline announcements, particularly in the new year, once we are past the second wave. I mean, and I can reiterate what we said in the presentation. You know, London is one of the largest travel markets in the world. We believe leisure will come back first. We're a leisure-focused airport, and of course, you know, we believe that UK will be back to travelling, obviously as soon as we get through this COVID. So it's still a very valuable airport, and not only that, a valuable catchment area at the right cost. So I think, you know, we are reasonably confident on that one.
Do you want me to take the next one?
Take the next one.
Is Amazon using your airports? We are always representing our key customer on the cargo side. We always say it's a global logistics partner, and that's as much as we say within that. We don't declare who that global logistics partner is.
And there are a couple of other questions from Stuart R. One was, what will the group's name be? Well, obviously, clearly, we're not going to tell you that. So, are the directors taking a pay cut? Is another one. Yes, is the answer. We've taken a 20% pay cut for the last 6 months. Is the answer to that. Just read a couple of the other questions while we go.
Okay. Next one is, why do you think gate fees will recover in first half of 2021 when the reality is any perceived shortages in the market will occur as we come towards the end of winter, and thus gate fees will be more rather than less volatile? The reason that we believe that is that actually once you come through winter and you move into the new financial year for us, which is March, we would expect gate fees would stabilise as construction returns to normal and the biomass plants are operating in normal circumstances. Yeah, I've got the next one as well, have I? The last year of positive operating cash flow was 2014. What do we have to look forward to in that respect? I think in the short term, we are not cash generative. And I would say that you are looking a number of years out before we become cash generative. But we are seeing the cash generation from the energy business, which we then use to assist us with supporting the business going forwards.
I think there are other questions.
What is the current debt? We obviously declared our debt at the year end, and we've obviously raised 100 million from the equity raise. And then also we've declared what the cash and undrawn banking facilities are at the present time at 119 million. I think that's probably the best response I can give you in terms of what the current debt is. We clearly will disclose that in greater detail at the half year results.
And we've had a question from Alex L. Do you see business travellers declining permanently? If so, doesn't that open up leisure slots to competing airports? So there are two sides to that. What I said was, you know, and I think the industry, whether it be IATA or some of the industry spokespeople, including the regulators, believe that the leisure will come back first. Again, short haul European leisure will be first. I think it's taken longer term for transatlantic and long haul. I think there is obviously an opportunity for business to return. I'm sure it won't be back to kind of normal levels for some time. But, you know, I just can't believe the world is going to continue to do business on Zoom and Microsoft Teams forever. Although I think there's a place for digital working. I think the important thing, I think, from a London perspective, because you mentioned slots, is, you know, short haul actually consumes most of the slots. And in 2 or 3 years' time, we're back to kind of capacity. Peak capacity slots will be limited in London. Even now, there's still slot trading going on. So it's clear that London slots are valuable. I think peak slots are going to be effectively a problem in a few years' time. And then, of course, London Southend, from an investment perspective, obviously comes back very strongly into play, even though we even think we've got a competitive advantage already.
Okay, I mean, there's a second question come in, which is 119 is net debt now. So 119 is our cash and banking facility. So we have a banking facility of 120 million within there. So probably the easiest thing to do is just, if you go back to the investor presentation that we did at year end, we have an exchangeable bond of 53 million. We had asset financing of 42 million, and then we had a drawn down RCF facility. So if you take the asset financing and the exchangeable bond, and then that cash and undrawn facilities that will help you get to the net debt. That excludes IFRS 16. If you include IFRS 16, we declared at year end 76 million on the core business. We didn't give a number for Stobart Air because at that point it was not under IFRS 16 accounting treatment, and we'll obviously declare that number at the half year. But I think we originally said as an estimate it would be 60 million.
And then last question, one of the last questions we've got here is, do you think it's good to sell assets? So we've got some non-strategic assets that are quite valuable and we'll sell over the next 2 to 3 years. So that they're not linked to obviously energy or aviation. We've got a port, we've got some residential land, we own some other land and infrastructure. So we obviously are going to sell those when appropriate at the right value.
Fantastic. Thank you. Thank you, Warwick. Thank you, Lewis. I think you've pretty much addressed all those questions you can from investors. And of course, the company will review all questions submitted by investors today and will publish those answered on the Investor Meet Company platform. Lastly, I guess, Warwick, perhaps I could just ask you just for a few words to wrap up before I redirect investors to give you some feedback, please.
Yeah, I mean, I think firstly, thank you very much for joining. Appreciate everyone's attendance. I hope we've managed to convey kind of the underlying value in our business. And obviously, if you have any further questions, just let us know. Despite COVID, we are, pretty optimistic about, the energy business, highly cash generative, and really highly valuable. And again, as I said, I don't think people are going to be sitting at home on Zoom for the rest of their lives. So travel will come back, and we're going to have a very valuable airport from an infrastructure perspective. But thank you.
That's great. Thank you very much again to Warwick and Lewis for updating investors today. Could I ask investors not to close the session, as you will be automatically redirected for the opportunity to provide your feedback. If you've accessed this meeting from our website, just a couple of seconds after the end of the webinar, the feedback page will appear in front of you. If you've accessed via the link sent you in an email, you'll be again asked to log back in to give your feedback. On behalf of Stobart Group and Investor Meet Company, we'd very much like to thank you for attending today's presentation. That concludes today's meeting, and good afternoon. Thank you.